The markets just wrapped up another intense week, and as we kick off March, critical signals are emerging across major asset classes. Is volatility gearing up for another surge, or was Friday's drop the start of something bigger? Is the US dollar just getting started on its breakout? And what's next for the bonds, commodities, and the indices? In today's video, we are setting the stage for the trading week ahead with a comprehensive multi-angle analysis. Volatility, sharp pullback, healthy correction, or a bearish reversal? The US dollar's precise bottom call and its strong 1.4% rally. Canadian dollar updates and the long-term outlook we nailed a month ago. Bonds and yields shifting gears. Are we entering a new bullish phase? Precious metals at the crossroads. What gold, silver, and miners are signaling now? Oil's bearish breakdown. How deep can this go? US indices. Russell leads the bears, while S&P500's key stocks like Amazon, Meta, Google, and Tesla paint the bigger picture. And for our global viewers, special coverage of NIFTY and a fresh multi-angle breakdown of Microsoft. Plus, don't miss details on our stock and crypto package, now only $10, giving you exclusive daily insights on NVDA, Microsoft, Apple, Meta, Bitcoin, and more on Discord. And as we mark 5 years of investing angles, our team has prepared a special gift for everyone who registers today as a reader on our site. Unlock select articles packed with key insights. Subscribe now and let's dive into the charts. Let's begin with volatility. What we are seeing here is a very interesting closure. First of all, this is the volatility index that we are tracking, like on four different indices, and all of them closed the day with bearish neutral candle. And at this point, it's not clear whether it's going to be a reversal or this is just going to be a pause before going lower. Most likely, I would say that considering the healthy trends and technical support, things like 50 over 100 days moving average, here the bullish cross, I would say that the perspective for bulls are slightly better. And if we look at the weekly frame, for example, we are seeing that all four instruments that we're tracking here, they completed their candles as a green ones, technically confirming a reversal on volatility. And they, like, for example, the first chart shows that the candle closed about 200 weeks moving average. And the other crosses here that formed, and all of them are bullish. That's a very good perspective for a continued rally higher. And I also do this for volatility. This is Elliott Wave chart that we shared with our subscribers just a week ago, saying that volatility possibly formed an impulse upward from the bottom and is entering the corrective phase. Possibly it's going to be a wave A, B, C for a flat or zigzag, and after that we would expect it to move a little higher. Well, that's the perspective, although I wouldn't say that Elliott waves are a very great tool for volatility, so this is a very specific instrument. So volatility is set for higher prices. Now, let's move on to dollar. Those who followed us on our call on February 26 might have entered gold dollar here, and those who didn't, they lost the almost entire wave 3 here. So it looks like dollar formed the bottom and is now poised for a big rally. So far, the wave from the bottom has been impulsive, and the chances for it to continue are fairly high. And if we look at the candles perspective, we are seeing a clear bottom, potentially double bottom on the daily frame, and the weekly, as we expected, formed a bullish engulfing, bullish engulfing with a break about the strong resistance level. Now, and the monthly closed with a kind of neutral doji, neutral candle that that was just a few days ago. It was a strong bearish, but right now it's more neutral. Maybe another candle like this, and we are expecting a move higher. By the way, dollar index remains bullish on multiple larger trends. And if you are interested in more details, you can check our recent update on investingangles.com. This is our long-term chart for dollar that we've been tracking since when? Since November 2020. This practically unchanged, and this was the last version of it in November 3rd, 2023. It also remains unchanged. We are tracking dollar so far, and we are seeing that this potential target for it somewhere between 113 120. Maybe in a couple of months or years we will see dollar somewhere there. That's the perspective for the greenback. Now let's have a look at loonie. This is technically a very painful chart for me to discuss as a Canadian, but nevertheless, this is my call on August 12, 2023, when the dollar US to Canadian was 1.34, and I said that it has all chances to move here to this rectangle somewhere between 146 and 150. Well, unfortunately, this call materialized entirely. This month, dollar hit the ratio 1.47931. Well, just in the middle of this target, and that was an amazing call, I would say, even though it's painful. Well, let's have a look what is the future for the dollar. Until the last week, dollar was doing well, Canadian dollar was doing well, and I thought it's gonna be a reversal. However, in the last week, what we're seeing, a strong green candle, and US dollar gained a lot against the Canadian one, and we are seeing here a tower bottom, strong tower bottom on the weekly frame, and the candle, the monthly candle, transformed from a strong bearish one to just a neutral doji, and on the 2 months frame we have technically a continuation candle right now. So the US dollar is expected to gain against the Canadian in the future. And if we look at our chart, this is the long-term chart, US to Canadian. We've been tracking it since August 2021. So far, we mentioned that when the dollar was 128, now it is 147, and it continues to lose ground. Well, and for those who is tracking the other way around, Canadian towards US, this is another chart that we are continuing to share. So it's been with our subscribers since March, and so far we haven't made a change in it. Dollar is approaching our target area. Now let's move to the bonds part. What we are seeing here, this is a 10-year yield for daily, weekly, monthly, and 2 months closure. What we are seeing here is a very strong bearish move in the last week. Yield broke through the 200 days moving average, with the weekly closure was strong bearish. On the monthly frame, minimally formed tower top, and the bearish engulfing on a 2-month frame. So the next 1-2 months we are expecting bonds yields to move lower. Although I'd like to remind that the bigger frame, like quarterly, and the larger ones, they remain bullish. So this weakness might be temporary for just a couple of months. Now, if we look at the perspective from the perspective of classical patterns, this is a possibility that US 20-year and 10-year, they are just forming bearish flags. And once they complete somewhere here between March and July, I would expect the rates to resume the rally. And this is the same on the 10-year yield. So let's move on to the next one. This is our long-term chart that has been in effect since the December 2022. No changes here, and what we are expecting now, that wave 2 that we outlined here, it would continue sideways or slightly downward. Yeah, after it completes, maybe it will take a couple of years, somewhat similar to what we were seeing in 1950 and the end of 1950s, beginning of 1960s. So 3-4 years of a stable rates, and after that we might see another move upward. From the Elliott Wave theory perspective, this was the first impulse of the bottom. Now it requires a corrective wave, and the wave is indeed corrective. Once it's over, we might see a strong move towards higher rates. Now let's move on. This is Canadian closure. What we are seeing, this is the monthly candle, and there's a possibility that this is a bottoming one. However, we would need to see a strong confirmation for that. Let's see what the Bank of Canada has to say on their next meeting on March 12. Speaking about TLT, what we are seeing here is the potential for an impulse, although I am not quite comfortable with calling this very first wave as an impulsive one. Still it could be a diagonal of some sort, and in this case, bonds might form the 1, 2, 3, 4, 5, the green path here, and especially if TLT breaks above this level 94.85, this path might become a reality. However, if it reverses here in the red rectangle, we would consider a much bigger correction here. And from the bigger perspective, this would be the path. Similarly to what we have just seen for yields, this would be a bearish flag. For yields, there were bullish ones. So once bonds move toward this area, I would be very cautious because of the potential reversal and a move down. When it's gonna happen? Well, this wave could be quite aggressive. Now let's have a look at the TLT candles, whether they support this move or not. So what we are seeing here is the daily continues to rise. So far, we are not seeing any reversal attempts here, and the 2 months frame closed with an inside up. Technically, the next 1-2 months, we might see a continued move higher. And the 3 months frame, I would like to emphasize, this is a big bearish engulfing that TLT received in Q4, and in order to reverse it, a much higher move is required, over 99.3 or even larger. Let's see if this initial impulse that right now TLT might be forming would be sufficient to overcome this. And the final, I would like to bring this concern. This is the spread between 10 and 22 years, and I would say that we're witnessing a very strong move downward, and the move is likely impulsive. And if the spread moves into the negative territory, it would be a bigger concern, especially if it drops below this purple line. We discussed it multiple times in our previous videos, what would be the complications and consequences of such a move. And on Friday, this was a big move by the spread from candles perspective. Technically, this wave right now is corrective, and we have a good chance to see the spread moving towards lower lows. That's the perspective for the bond market. Now let's move on to commodities, and we will start with silver. So what we are seeing for silver? It was a pretty bearish closure on the weekly, monthly, and 2-month frames. So the biggest concern here is that silver lost 100 days moving average, and it formed an 8x20 EMA bearish cross on the daily frame. The 3-day candle is still forming, but the tower top that was formed in the middle of the week is pretty significant. On the weekly frame, a strong bearish engulfing, and the transformation of a bullish candle into a bearish one on the monthly frame in just 1 week. And I would like to remind the 3 months closure in December, quarterly closure in December was very bearish engulfing. Now let's see how silver works the next candle. There is a good chance that we might see a red candle in Q1 at the end of March. Speaking about the charts, so this chart we've been tracking for a while right now, and this was the last update on February 21st that we shared. Since then, silver continues to move down, and now it is very close to completing another big impulse downward. In this case, we will consider possibility of an even bigger impulse, 1, 2, 3, 4, and 5. Let's see how it develops. So far, the waves down were impulsive, waves up were corrective. And this is another chart I'd like to share is an SLV Trust. This is the chart that we shared with our subscribers on February 8th. Since then, it has been practically unchanged, just a minor update for the targets. That's the perspective. An impulse off the top, wave B or 2, and now SLV is moving towards these 2 areas. If it gets reversal and gets strong support in the blue area, that's a lucky path, and SLV will resume the rally. However, if it moves towards this red area and finds support there, we will be considering a bigger impulse. That's it for silver. Now let's have a look at gold. What we are seeing is the candle map. The concerning things here is that the daily is falling. We have a healthy continuation, bearish continuation candle. The weekly closed with a strong bearish engulfing, and it wasn't a surprise at all, especially after an inside candle in previous week. And what is the most concerning thing is that 10-day futures closed with a big bearish engulfing, and this is a serious escalation of the bearish odds. While the monthly is still bullish, although this upper shadow is somewhat concerning, but not very, I would say. So that the momentum is gaining on the smaller frames. So the daily, weekly, and 10-day frame, which is twice higher, and the weekly, and obviously the weight is much bigger. So these are showing very good potential for a bearish move. And now let's have a look at the charts. This is the chart that we shared with our subscriber just on February 24, saying that gold completed a diagonal. And this was the projected move towards the origin. And obviously gold surpassed this one, and it means that we have a good chance right now moving towards even lower lows. And for the short-term path, this is the perspective. We are right now looking for another impulse to complete here. Once it is done, wave 4 is the next potential move. So we are not putting it here. Let's see how it completes first. And the final for the gold section, I'd like to show this GOD. GOD formed a green candle. Perhaps it's going to be a bounce, but the candle itself right now is somewhat neutral until it is confirmed. Speaking about the weekly, this is a very strong move, and the 8-day frame is closing on Monday. It will be interesting to watch what kind of candle it's going to happen. It's going to be printed. The monthly, similarly to gold, printed a bullish continuation candle. However, with a strong bearish move, it might convert into a spinning top. That's about gold. So we are seeing that silver and gold are technically aligned, and the only difference that silver is more bearish, and it is leading technically. Now let's talk about oil. Oil closed the month with strong bearish candles across all frames. I'm not even talking about the daily and smaller. Let's start with the weekly. With the weekly is a bearish, although it has upper and lower shadows, somewhat higher, but nevertheless the closure is bearish. A strong bearish engulfing of a hammer on the monthly frame, and the continuation candle, bearish continuation candle on the 2-month frame, and then freshly made 2 months 8 by 20 MA bearish cross, which is expanding. So these are very concerning signals. Speaking about the chart, this is the chart that we've been tracking since December, end of December. We said that oil is gonna rally and then it's gonna fall. This is exactly what happened, and it reversed right in the middle of our target. So far, oil has been about 12% down from the top, and we are not seeing the potential for a bigger bounce. And speaking about the Brent, some investors track Brent. This is our chart that's been in effect since May 2024, practically unchanged, nothing new. Brent is slowly moving down, and we are expecting it to find support somewhere here between 50 and 31, although it might take a couple of years to go there. Now let's move on to the next section. And by the way, I'd like to introduce you to our website, and say that our community is growing at an incredible pace. Over 700 new members joined as subscribers to the YouTube channel just last week. Thank you all. Thank you very much for your trust and support. Your engagement motivates us to deliver even sharper market insights every single day. If you are new here, make sure to subscribe and stay ahead of the trends. This is our website, and these are just the reports that we posted today. Russell monthly, oil, Nasdaq, US bond signals, TLT monthly analysis, silver, gold, Microsoft, and many, many more. So you're welcome to visit our website any moment. Now let's move on to the stock market. And we will start with Russell. What we are seeing for Russell is technically a very bearish closure across multiple frames. The only thing that Russell is trying to form a little bottom here on the daily frame. However, this is not very conclusive until we see a very strong impulse and a very strong formations on the daily and bigger frames. And that's why we have the weekly frame is strongly bearish, and Russell lost 100 days moving average. 10-day frame also strong bearish. The monthly confirmed a top by just $0.6 or 60 basis point. And the 2 months frame closed with a strong bearish engulfing after a hammer. There is nothing bullish in this picture. Now let's have a look at the charts. This is the chart that we've been tracking since February 12th. We outlined this path, and so far we haven't changed anything here. So far, Russell is moving down, and we are expecting this wave, potentially wave 3, to complete somewhere here. And speaking about the big term, long-term chart, this is the chart that technically started our analysis. This was January 2020, when we said that Russell is ready to plunge hard and find support somewhere here around 950, 960. Obviously, nobody believed this because it was like a 45, almost 45% decline that we were projecting. And this is the next chart that we shared in February, beginning of February, more defined, more detailed. And we all know how it ended in 2020. So this was January 2nd, 2020, our original call, and Russell dropped to 966, losing 45%. That was an amazing call. So what we are seeing here is a large term. I'd like to say that this is a 2 months frame, and after a hammer we have a strong bearish engulfing. So what we are seeing next is this potential green target area. This would be either wave C of 4, or the worst case scenario, this would be wave A of a bigger correction. If we talking about wave A, this would be a correction something like this. I don't have a very clear targets right now. We still need to see how it works, but this is not this one. So this is the perspective path if this was the top of wave 5. Well, let's move on No, that's Russell, and Russell is known for being a harbinger for the entire market. If Russell is very bearish, maybe the other indices will join the pack. All right, so now let's move on into S&P 500. S&P closed the day on Friday with a piercing line and pushed above the 100 days moving average. Perhaps it could be a reversal, but let's see what kind of candle it develops on Monday, Tuesday. Technically, it needs a strong confirmation. There is a question though, because right now on the weekly frame, technically S&P just confirmed a reversal on the weekly frame and formed a very strong 10-day bearish candle. The monthly though is somewhat neutral. It can flip either way, and now we will be watching it only at the end of March. We'll see what kind of candle it develops and we'll go from there. If we look at the other monthly closures for S&P 500, for Nasdaq, for Dow Jones, and for Russell, we are seeing that Nasdaq is technically more bearish than S&P and Dow Jones, and Russell is very bearish. So maybe Nasdaq and Russell would lead the other two. We will see. This is the daily closure of SPY, QQQ, DIA, and IWM on Friday. What they're seeing is that Dow Jones is looking for a reversal, so it has the strongest bullish candle. And if we see a confirmation on Monday, well, we might see a bounce or even a mini rally. So far, it is unclear, but we will discuss it in our daily update on Monday. Speaking about the charts, today is March 1st. So speaking about the charts, so this is the chart that we discussed with our subscribers on February 19th, saying that this is an ending diagonal and S&P 500 has all chances to move lower and potentially reach the target area, which is the origin of the diagonal. Well, looks like it is happening, and the index is moving in an impulsive fashion. From the Japanese theory perspective, this could be a triple top. I'm just saying, so it's we still need to see a confirmation. Technically, a move below this line would be a big confirmation. And if we look at the minor charts, let's switch it to 1 hour chart. What we are seeing is clearly an impulse down. It could be an impulse 1 and corrective wave 2 with a truncated C, or I am also looking at this potential. This would be wave 1, 2, this could be wave 3, 4, and 5 of an even bigger impulse. So in this case, this would be wave 1, and we would be looking for this type of correction, maybe a bigger one, lasting for a week or even 2. And that is a possible path. Right now, this is just a beginning of the wave, and it's not very clear whether this wave is impulsive or corrective. We need to see a bigger structure. That's the perspective that we will be tracking in the next week or 2 on the daily basis. Now let's move on to see what is next here. Okay, so I have a quick overview here for the global indices. The most interesting are NIFTY. We will have a detailed discussion later, just in 5 minutes. And Japanese Nikkei, it technically confirmed a reversal on the monthly frame. So these two are strong bearish. Australian one possibly forming a sandwich, bearish sandwich, but it is not clear right now. So it didn't even lose a big support, 8 months support. So the Europeans, German and FTSE, they are closed with bullish candles. So far, no concerns. Canadian is somewhat neutral, and the Shanghai composite is, I would say, it's bearish. It had a chance to form a bullish engulfing here above the red line, but red candle, but it failed. So it stays bearish with a chance to move lower. Hang Seng is technically bullish, but we need to watch it closely. Now let's move on to the technical part of our discussion. This has been the 10-day frame that we've been tracking for so many weeks, and it finally closed on February 28th with a bearish engulfing candle. And if we are looking at this one, so it has better resemblance with this red one, which happened in January 2022. And there is a good chance that we are seeing the same, we are facing the same move that happened in the entire year of 2022. Although it might not be a very sharp one like in 2020, but the decline is in the cards. Now let's have a look at some components. So these are the biggest stocks and their monthly closures. So the Microsoft is clearly bearish. Amazon formed an inside down, a big bearish candle. The same happened for Tesla. Tesla formed a tower top. It's even stronger. Google is falling inside down, the same as Amazon. NVDA tried to negate this confirmation, but it technically failed because this candle is a thrusting line, and the chances for a continued move lower are slightly better. Berkshire, an interesting candle here. So this is the weekly frame. Technically it reversed and is expected to move higher. However, I would be very concerned about it because of a strong move above Bollinger Bands. Historically, every time when Berkshire made this move, it retraced. But at this point, we are not seeing any strong bearish reversal candles, even on the daily frame. So far, everything looks bullish. Let's see how it develops over the next couple of days or weeks. And the final one for this S&P 500, I'd like to evaluate the sectors and their monthly closure. What I can say that financial and healthcare are the only ones who closed with bullish candles with better chances to move higher. Every other sector had either neutral or bearish formations, and it applies to technology, which has the biggest value, biggest weight, about 33%. Industrial is not bullish, it's more like neutral bearish. XLP, consumer staples, it had a chance to form a very bullish bottom, but it failed by just a couple of points, and this failure could be fatal. Utilities are trying to form possibly a falling three methods after a huge bearish candle, so maybe it's another month of green but I would expect it to move lower. And the similar formation for energy. Well, I would say that while it's not a very strongly bearish, but it's definitely leaning bearish from the sector's perspective. So now let's move on to our special features of the day, and these are Nifty and Microsoft. Let's talk about Nifty, the Indian index, first. What we are seeing here is a strong move down, and if we evaluate the monthly closure, it is falling, and in 1 month Nifty lost 8 and 20 EMA monthly moving averages. On the 2 months frame, it's also a strong bearish move. If we look at the 3 months quarterly, which will be closing next month, expectedly, after a so strong bearish engulfing on the Q4, we are expecting a red candle in Q1. Now, if we look at the 10-day frame, we discussed this statistics before. We said that we had an 8 by 20 EMA bearish cross here, and there were only 12 events before of such magnitude, and they were leading to 17 to 64% losses with an average of 37. This average would be here, 16.3, perhaps finding support at the 200 periods moving average. That's the perspective. And if we look at the daily frame formed 3 bearish crosses, 100 over 200, but I would say that right now it's grossly oversold, and we might see a bounce at the beginning of the next months. Let's see how it develops, whether it's corrective or impulsive, and what are the perspectives. So far, the bigger frames are bearish, and we need a very strong move upward in order to reverse this trend. And speaking about the charts, this is the chart that we shared with our subscribers when Nifty was almost 25K, and we said that when it was in October 18, beginning middle of October, this was here. We said that Nifty is set to move lower, and this is the chart that we've been tracking. We shared it on December 21st, and so far the targets remain the same. So right now we are seeing a target, the index in the middle of the red target, but it has a good potential to move even lower. And if we look at the bigger frame, the same thing, the chart at the beginning of October, saying where are we going. Right now, Nifty is potentially close to the end of wave A or even 4. However, we need to be very careful here, because the bigger frame odds are just increasing, and there is a good chance we can see an acceleration down. And the worst case scenario for Nifty is this one. Assuming that Nifty completed a cycle wave 1 here, and we would be looking for wave 2 somewhere here. Typical retrace about 50 to 62%, and the chart we discussed it back in November. So far it's been unchanged. Let's see how far would it go. That's about it for Nifty. We are seeing it's a very bearish closure and a very bearish perspective for the next couple of months, if not quarters. And now the final discussion of today's digest is Microsoft. So what we are talking about. Microsoft is This is the chart, smaller short-term chart that we discussed back in December when Microsoft was 437. We said Microsoft is going down, doing our heart. This was our call. And since then, Microsoft lost 15%. Not a bad call. And this is potentially an impulsive wave that Microsoft is developing right now, and we are looking for a bigger wave 3 to be complete here, potentially 3, 4, and 5. This would be the target. And if we look at the candles, this is a very concerning development. 5-day frame is getting bearish. The 8-day frame closed with a strong bearish candle, and the 2 months formed a very strong bearish engulfing. And on the daily frame here, after these 3 bearish crosses that formed a Bermuda Triangle here, that's a potential harami or thrusting line candle, which can be viewed as a bearish consolidation or bearish continuation candle. The next one will be critically important, and Microsoft needs to do what? It needs to rally about 2.2% on Monday in order to confirm this reversal. Let's see what it does. The next chart for Microsoft is the classical pattern that we've been tracking with our subscribers since the middle of October. And it looks like Microsoft has a very good taste for these type of patterns. We had it head and shoulders in 2022, and Microsoft lost quite a few points here. So if it repeats here, and I'd like to emphasize that it already touched the neckline on last week. So if this is broken through, then we would be looking for 320, 305, another 20% down. That's the perspective from the classical patterns. Let's have a look at the technical perspective, the final one. This is something that we've discussed since October, the MACD monthly chart. Microsoft formed a MACD bearish cross back in November, and since then it has been expanding. And we are seeing lots of similarities between the Microsoft's path in 2022 and now. So if this is completed with the same similarity, then we will be looking for about 285 price for Microsoft, potentially finding support on 100 months moving average. All right, so as we head into a pivotal trading week, the charts across bonds, commodities, currencies, and indices are flashing signals you won't want to ignore. Volatility is heating up. The US dollar is gaining strength. Precious metals are slipping, and the bond market could be setting the tone for the next big trend shift. The Russell is leading the bearish charge, and the S&P 500 leaders are showing cracks that could define what's next. We'll be tracking every move in our Daily Waves report, so be sure to stay connected. Follow us on YouTube, Twitter, Telegram, Reddit, and of course at investingangles.com. Check out our free reader subscription for select premium articles, and don't miss out on our 5-year anniversary specials. Thanks for watching, and as usual, happy trading!